everybody, and welcome to the live stream here for Monday. I hope everybody is ready for another interesting week. Of course, we do have some economic data coming out, but specifically, this is the week of course, options expiration. We'll be talking about where maximum pain sits for traders like you and I out there, and we'll also be discussing, of course, everything to do with stocks, commodities, and cryptos. How was everyone's weekend? Are you ready for another week of trading, investing, and everything else? I hope you are. And a big shout out to everyone that's joining us here early today. If you do like the stream, make sure to smash that like button. It does help us out. And of course, it keeps everything ticking over. So without further ado, let's begin by bringing in the discussion here to what's going on this week with, of course, stocks and anything we picked up over the weekend. So I think the first thing I wanted to mention was just quickly flows. We have seen a couple of flows. I'll see if I can load up here just this little chart. I guess this might help us. So basically, we can see here that large clap. Oh, well, let's go with where retail traders are doing. So retail traders led buying, led buying, and institutions led selling. We know that Bank of America net client by group. We also know institutions have been net sellers over the last 4 weeks, in comparison to retail traders, which have been net buyers, and corporations, which have been actually increasing their purchases, which is pretty normal. And then, of course, we have the total. We also do know that we have a little bit of flow here. So if we're talking about flow and what's going on, we have a couple of interesting factors. The biggest thing is small caps have seen pretty interesting inflows. Large caps in general seeing outflows recently. Again, semiconductors, I think, rotating out, and that being clear with technology being the weakest. Energy, industrials, consumer staples, and healthcare being the strongest. 2 of the 3 sectors in there that we've discussed quite a few times. Now, if you enjoy the markets, what has really been the story of the last week? Well, I think it's going to be most likely stocks and semiconductors. So we saw massive sell-offs across semiconductors. We had a feeling this might occur, and it certainly has. And it's led into some, I wouldn't say brutal selling, but definitely some beginning selling. So from the top to the bottom, let's just look at this. 9.5% cheaper to buy semiconductors now back to May prices. So, you know, sometimes markets do kick off a little bit, and they've been melting up and suddenly they're melting down. Where could semis go? Well, I've long speculated that we're going to probably find some form of buyer in here initially. So this week is possible to see some rallies. We'll talk about that soon. And then it's more than likely I would like to see these levels get filled. So that's back into those 440s, 450s on SOX. And of course, SMH, one I like to use, which is Vanex Semiconductors. And that's showing us here that if we got back to, like, let's say a golden fib, we'd be looking at around 132 on the level. And I think that makes a lot of sense. Something like this would be a nice, healthy correction during this market run. We've got a big super chat coming in here. So as always, appreciate it. Alexei Logochev, I think it is. Thank you very much. AED 250. Appreciate it, man. Sorry for AED. That's all right. I'll take anything that isn't Australian dollars right now. Lexi, no, thank you very much. Living in the UAE, thank you. I hope you're enjoying it over there. Can you look through Uber today, please? We certainly can. If you don't mind, we'll just keep going through our medium-term concept, and then we'll come straight back over. So again, thanks very much, Alexi, for the support. So yeah, semiconductors in focus this week. I do think there's still a little bit of negativity. This will be an interesting low. We could bounce, find something like this, move down here. Could that be the end of August? Let's go through what our thought process is into the end of August. So let's go to our previous last 10 pre-election years and talk about where we are right now. So, of course, we have now taken off a week and we face ourselves here. This is what generally happens. A sideways to up week. So maybe a little bit of selling initially, then we get into the upward tick, kind of like a sideways week, not necessarily rallies met by sell demand, and then we bottom off at the back end of August. So will that be the same thing again? August. We know it's weak. We suspected this would happen. And of course, we also think there's a double dip that usually happens into September. Now, is there a real reason why these markets are selling off at the moment? Well, of course, negativity started to take over on the charts, but that is pretty normal. And we just have to kind of go with will this play like a normal pre-election year? And if it looks something like this, which it has so far, and if it's doing everything, that we have to kind of just go, well, this is the more likely scenario. Of course, price action will lead the way, and we're looking for some key levels on the S&P we'll bring up soon. That's case one. Case two, usually we see increased volatility, which is here. We are seeing increased volatility, but the VIX isn't spiking. It's being suppressed by zero DTEs, and this is because zero DTEs have hit all-time highs. Yeah. That's a big one. Zero DTEs, these sneaky banks using them. They're suppressing the VIX. I will do a video on it soon. And there's a good article and a couple of things we'll be bringing into that. So if that's something that interests you, you're a first-time viewer of this channel, make sure to subscribe because they are very sneaky, these Wall Street guys. And what they're doing with that is a bit nasty. Do remember, we're not in September OPEX, but this is a great one to keep in mind for the future. September OPEX post-weeks, very negative statistics. So again, would that line up? Well, here we go, 723, 7 up, 23 down post week, basically third week of the September period. And you'll notice, look at that, third week into fourth week, look where you do that double dipping right in that zone. So again, statistics starting to play out for that in the future. Let's take a look at Max Payne as we go through the options expiration. We might refresh this and see whether it's updated anything else. Got some questions about AMD and a few other stocks. We will go through plenty of others, but we do need to do Uber first, so we'll do that soon. All right, let's jump through today. Today's put wall seems to be about 440. We're still trading above that, so 440 could be where the markets kind of stop if they are selling off. We do have 450s remaining, kind of the big key point for the rest of the week, and we've got total amount fairly large here, looking at around 2.9 million, decent amount of open interest. Not a historically large amount overall, but you can see here maximum pain sitting at around 440. So it's underneath where the current market is, but I think 430, 440, and 450 should be the ones we're watching this week. Basically, it should stay within here, and that would mostly say that even if we dropped, we'd probably come back up. And then if we could rest anywhere, 440 would be the best. Remember, we don't usually use max pain except for third week OPEX. So that would be it. Let's go back to the chart now. Let's understand the US 500. It comes in here negative 0.2%. It seems like forever since we've actually had any type of selling here on markets. So it's always surprising. So let's go with the bull case first up. Bull case scenario is number one. Let's draw them all in. Let's delete all of this stuff for a second here. For the bulls this week, number one bull case, 50-day moving average, blue line here. Did we hit it? Yes, we did. Are we finding some kind of buying off that? Arguable at this point. Bull case number two, we're at the bottom of the Bollinger. So we should come back and retest the middle, which is the 20 moving average. It's fair. Bottom of the Bollinger, you can see, and top of the Bollinger, you can see how it interacts with that zone. Often it does come back. So that's, of course, bull case number two. Bull case number three, random trend line that people draw. I've seen this one being said to me a few times. People love curve fitting. Look at that curve fit. Oh, it's a beautiful trend line, yeah, guys. Anyway, I'm not big on that trend line, but a lot of people are sending me all sorts of curve fitted trend lines. Yes, I guess you could make a case for it. And of course, the other reason is the gap. So the gap fill of 440, which ends up being right there, which is where we are. Plus, you've also got roll reversal, which people are forgetting, which is resistance plus support. So look, is it critical level? It's an important level. There's no doubt about that. So that's the bull case. Where do I think the bull case really comes into play? Well, I think that this little green box up here in the 20 moving average is important because remember, even if we do get a bull case, we're expecting selling from where the bears sit, which is sitting around 45.40 at this stage to 45.50. Now, if we manage to breach through 45.50, we're probably moving to a new high. You'd have to think that is plausible and quite possible here on the charts. Let's go to the smaller timeframes. Let's have a look at the 15-minute. You can see again, the market's making a series of lower lows and relatively speaking, lower highs. And it does find itself here at a point where if you were a bull on the really small time frames, you could make a small case for a scalp here with stops underneath these lows, trying to get it back up right now, right here. Would I do it? Oh, it's pretty marginal. I would estimate it's like a coin flip for a 2-to-1 style trade. But is it worth taking? Oh, well, it's up to you. I mean, I have no idea whether that's a really good one or not. I don't think it's good enough. It wouldn't meet enough replication reasons for me. But anyway, yes, you do find it at the buy here early in the session, just before we get opened. Now, if we end up making a new low, I want everyone in the chat to guess the next level based on maximum pain. While we get that guess going through, let's answer Alexei's super chat, which is, of course, for Uber. So we'll put that back up. I want you to guess, where would the market most likely go to if it moves underneath 44.44 right now? While we wait for that, we will bring up the next chart, which is going to be Uber. Then we'll get back into the rest of it. So what do I think of Uber? I think the same thing I thought last week, which it still should be selling off this level. So we talked about that being the target, and we talked about how we thought weakness would come in here. I still maintain that there is further weakness to come for a stock like this. My suspicion is it might stop off somewhere around these lows, which is $42. The main reason why, as you can see, there was wick purchasing before. The weekly 20 moving average, which is mean reversion, is coming back. And that would probably make the most amount of sense. So somewhere in here, another thing we could do is we could pull a volume profile from the top to the bottom, or the bottom to the top here, and have a look at the most traded level. Now, it doesn't look like there's a huge amount of trade through there, whereas more trades come here. That would be consistent with what we're talking about on semiconductors before. This would be consistent with more of a just an initial dip into a rally for the rest of the week until we get OPEX, and then, of course, potentially sell off into August, maybe hit these levels. And you'll see this come up a lot for stocks, that these are the zones that generally speaking, we would be looking at. And yeah, I think that's probably my main thought process. We have churned on Uber. We turned towards the downside recently. I do think that this was a strong sell target. And of course, I still think that we're going to get mean reversion. All right, let's see what everybody thinks. So predominantly, I think you guys are probably correct. 440 seems to be the big one here. Neutered analysis says dollar seems to be a bit overvalued. Debt per GDP, US now top 10 worst countries in the world. Well, one thing I would say is never bet against the US dollar. However, when I say that, I mean from a bankruptcy standpoint. So yeah, probably is a little overvalued. And I think people like Stanley Druckenmiller and many others do believe the dollar short is one of the better trades coming forward, especially when the Fed does end up pivoting. At the moment, it's kind of like in the death lurches. So it's moving up, it's moving down. It's doing so because, of course, the whole Bank of Japan situation and everything else that's going on is kind of forcing yields to go up a little bit here. So we're starting to pressure yields. So if you have a look at yields here, here's the 2-year. You can see 4.939. So actually, a lot of the dynamics in the world right now, including oil, which still continues to skyrocket, yes, okay, it's trading down 1.44, but still very, very high. All of those things are pointing towards maybe we're going to see a 5.1% breakout. And that is strong for the US dollar for now. Now, if we start to see Fed pivot and cutting of rates, is that strong for the dollar? No. So at the moment, remember, the yield curve sits like, well, it doesn't sit like that. It sits like this. Very small amount of cuts through the next 2 years. If we start seeing worse economics, you're going to get more cuts. That's going to weaken the dollar off. So I think most of you are correct on the S&P question, which is, of course, 440 is the answer I was looking for. And the main reason I was looking for 440 is because it becomes the next level of demand on the chart. So if we scroll up to the 2-hour, you'll see I boxed it. 440, very strong level. And that's because it's a round number. It's maximum pain this week at this stage. And also we know that people will have stop losses right underneath it. So I'd probably think it would go like this. Spike the low. Something like that maybe. Find a rally, possibly somewhere in here or here. We'd find shorters after getting that rally through. So, I mean, in my preference world, we would move down straight to 440. Take the low, rally a little bit, sell off again, get one capitulation monster sell. If we could, maybe push a 4,200, that'd be pretty sweet. And 4,200, I would expect strong buys. There's big players, I would think, around 4,150, 4,200. Michael, I see your question. AJ says, is mean reversion the same as correction? Well, correction is, I don't know, correction is kind of like a weird word. What does a correction mean? Does it mean 5%? Does it mean 8%? Does it mean 10%? I guess you would say yes, it's the same kind of thing. Mean reversion means we go back to generally it's considered the weekly 20 moving average. So if we went to the weekly chart here and you looked at where the weekly 20 moving average was, you'll find that the weekly 20, which is the middle of the Bollinger, sits at 43.20. So effectively, as the market would come down to here and then it would bounce. Okay. And you can see we've got two boxed levels. If the market capitulated and went here, that's where it would be where it bounced. Now, I would like to see deeper to the most traded level. Find the 50 and boom it off. I don't know if you can get that. We don't know. I mean, that's the problem. We look at the weekly, we see the closes, we have a suspicion that we've got weakness here for the next 1 to 2 months. We don't know whether the Fed's going to come out and do something crazy like they always seem to do. Those things we don't know. But it's a good question. Correction, mean reversion, sure, you could call it the same thing. Isn't 4,200 monthly the S3? Probably would be if you put pivots on there. According to Investopedia, correction is 10 to 15%, I think. Well, that means that most years don't get a correction because I would say that 2 times a year we get corrections, in my opinion. Okay, this is the Tom version of correction, and they're between 5 and 10%. And predominantly, that's the type of sell-off that you get usually 2 times in almost every year. Okay, you get these kind of 5 to 10% corrections. In my opinion, it's a correction, whatever. 10 to 15. Well, go back over the last decade before 2020, and you won't get too many of those. Well, I'm on TradingView, and I got Tesla in the bottom right. There is a picture of Elon smoking a blunt. Is that true? You made me look. Let's have a look. Where's my picture of Elon? Is he meant to be down here? TradingView is getting some nice little additionals down here, isn't it? Look at that. Gives you performance, gives you these weird adjusting ratings that mean nothing. It's all cool. Get your earnings little data here. Kind of cool. Anywho, let's go on to Tesla while we're there, and we'll go into a couple of single stocks. Then we'll go back to the Nasdaq, dollar index, etc. So what's going on with Tesla? Well, it floats down this morning underneath 240. So this was where we were, if you're a bull, you were hoping it held. Now, a little bit of a tell on these because you know where the structure is. If I was to buy this, I would look for 2 things. 1, today was going to be opening up. Obviously, that doesn't seem to be happening. 2, we would want to, if it was opening up, what type of pattern would that be? Let's see if everyone in the room's smart. You guys are smarter than me. You know what it is. You know what it is. The 700 plus of you that have joined us, you know what it is. To put it in the chat. Also, if you can, give us a big thumbs up if you're enjoying the stream so far. Joshua Burns says it's opportunity, man. 7 to 10% is correction. 3 to 5 is pullback. Can we just agree that it's just all percentages and who cares about the wording? That'd be good. Island reversal? Yeah, that's right. It's island. That's right, bitch. It's island. Everybody's waiting for the new Model 3 Highland, says Kevin. Does that mean it's time for me to sell my Tesla? Is that what I've got to do? Anyway, you need gap down, gap up. Obviously, that would be an island. That would be a good momentum shift towards 252. If it breaches this level, I'd be looking towards further longs. But at this point, we just know that 240 was where a potential buy could sit. We did see an initial reaction to it. Today, if this holds underneath, it's going to be a bit of a shunt to a lot of people. And it believe me, today's close could be very big here for Tesla. So if it does rally and it moves back above, that's a good momentum switch. That probably shows you there's another day or two of buying in it. But if it holds underneath 240 and these levels over here, it's highly likely we're going to move back down to the 210, 220 zone, which will pull us into daily 200s. It'll pull us into fib level pullbacks, See a daily 200 here at 200. It'll really take off a lot of that big steam that it got recently. And of course, for some Tesla traders, you guys will be getting excited. I'm sure this is anyone frothing over this price? Anyone like the idea of 200 for Tesla? Is that someone's target for the buy the dip scenario? Thanks very much, Adam. Appreciate it. Does anyone else think Tesla will fill the gap at 285? Oh, no. Well, it will. I believe it will fill the gap unless the company's going to die or something. But right now, no, I wouldn't think so. Not without it going back above, to a new high, start testing 315, et cetera, et cetera. Netstar says, what about your 145, man? Oh, man, I still get copped for the 145. Come on, look, 152, 152. Yes, there are plenty of gaps still down here, 120s, 140s. I don't blame people for looking at that. Absolutely not. But I think that you will still get a bounce somewhere around that 200-ish, 210 if we did come in. And of course, I've got some big boxes down here that I'm looking for turns. I'm not really won over by necessarily having to own Tesla stock anytime. So I always look for the nice value town if we can get it. All right. You guys asked for AMD. Let's have a look at AMD. We'll get off Tesla for a second here. Thoughts are today it's closing underneath, or it might close underneath. If it does, that could bring in more rally into sell. And we're moving towards 200, 210. Let's have a look at AMD, something very similar. So we talked about weakness, we believed, in terms of AMD selling through this point here. We also saw some large trades here. That was reported around 2 weeks ago that we talked about this. Now the market is breaking down again for AMD. Now, if that happens, we could be going further. And I think the next stop could be around $95 a share for these. So $95 per stock. Is that a bargain? Is that cheap? Is it bad? I think it's okay. I mean, AMD is definitely not my favorite stock. I've been around long enough to know about AMD's little rallies and little dumps over time. And I remember this one over here from 2018. And there's been plenty of them where it kind of sits there and does nothing. But, they've been doing well. It is back to mean reversion. So you could argue mean reversion is here. But then, look, it's already reacted to this big aggressive buy followed by a monster sell. If anything, that looks like a weak market. And it does look like, it could move further. And next stop probably around $95 if it does close below. So you can kind of see how semiconductors, AMD, and all these others could be doing this. If you are a bull, what are you looking for today? Well, of course, you're looking for a gap up to give you those island reversal style momentum trades. And it's possible. At the moment, it's pre-market down. If that continues, then you would have to think, well, it's probably going to sell through for a little bit here. AMD will probably run like Fook end of October, thanks to Biden. Okay, thank you, Forgotten Era. Deb says, NVIDIA, please. Yeah, we'll take a look at NVIDIA. AVGO as well. Again, semiconductors coming under fire. Let's have a look at the daily here for NVIDIA. 400, big level for it, 402. Strike from top now to sell off is over 15%. Now, I've talked about this before. I do think that NVIDIA has sold. I wouldn't say it's a super aggressive sell for a stock that's up so much. But yeah, this could mark, I mean, historically, I've said this on AVGO. I guess we just hit enough percentage for me to think that we're probably going to sell, rally, and have some sideways action out of NVIDIA. Remember, all of our favorite man, the Kramer himself. The Kramer himself has said this about NVIDIA. Let me just get what Kramer said about NVIDIA. Okay, we're ready. You ready to see it? This will hurt you if you're an NVIDIA fan. I'm going to bring that on. There it is. Jim Cramer thinks this year's near triple in NVIDIA stock is just the beginning. It's dead. It's dead. It's gone. It's done. It's over. It's over, guys. David Peterson, says, just can't fault NVIDIA aside from price. Yeah, look, I like the stock as well. I've had plenty of NVIDIA graphics cards over time, plus everything else they're doing. But yeah, the price is a little expensive, guys. And if Jim Cramer thinks it's cheap and should triple, then that's probably not a good sign. Which prices should we go to? Well, I think at 370 is a fair target for Nvidia to initially hit. Generally speaking, when it does when any stock does a rally like this, I'm often looking for brutalized sell-offs, giving you like a 280. No one will be patient enough for that. I think this is a stock where if you're going to trade it, say you want to invest into it, you kind of got to look at it from a DCA perspective. It's not a solution if you don't know what that is. So just remember, you've got to make your own decisions. But yeah, look, Nvidia is well known to have big pumps and big dumps, and then big pumps again. So I don't think the stock's going anywhere. I do think that this is possible, 370, and I do think 15% really marks itself, especially if it sells off again this week, some kind of pull up and then possible weakness, followed by strength later on in the year, if not maybe even into the start of next year. With Kramer, do the opposite. That's the point there, Graham. Absolutely. Use the Jim Cramer button. Sell, sell, sell. Yeah, exactly. The kiss of death from Kramer. Yeah. And if you look at the date, August 9th. Okay. Let's just have a look at the day that he says this. August 9th is here. Okay. The day it sells off. Let me just show you where we were on semiconductors that day. August 9th. Here it is. Jim Cramer. Buy Nvidia. I love Nvidia. How good's Nvidia? 3 days before, a huge sell, we now know, huge trade in semiconductors. 3 days later, Jim Cramer, buy it all. 2 days after, you dropped about 5%. Thanks, Kramer. Please, USO analysis. Absolutely. Joshua Burns says, oversold on the monthly charts usually seems like a good investment place. You mean Nvidia's oversold on the monthly charts? Jesus, really? Really? Oversold? It's down 15%. That's not very much on a big rally. I don't know about that. USO, people asking about United States Oil Fund. Yeah, well, look, I don't trade USO and because it's a little bit inefficient. But what I will do is I'll just use US oil to basically show the same thing. So US oil, of course, rallied through these highs, gave us a long leg doji. We're trading within that range and we're selling here into today's session. Let's have a quick look at US oil. So we can scroll through. Got maybe a 2-hour chart. So is it weakening? Sure. Has it been? This is where I think there is a trend line behind it. So there is a pretty significant trend line. We hit it just then. The reason I can say this is relatively significant, even though I am curve fitting the bottom off a little bit, you can kind of see it's come down 1, 2, 3, 4, 5. So is it making a series of higher peaks and higher troughs? The answer is yes. Do I like it? It's okay. It looks like a good trend line, I'm sure, to some people, but that is a higher peak. And this is still a higher trough. So if you were looking at oil, you've got to say, well, maybe here's where we find the buyers. This price above, which is 83.1. Remember, we saw the inflows at the start of this show that have shown the biggest players have been buying healthcare, they've been buying staples, they've been buying energy and industrials. They've been the most popular sectors that these big players have been buying recently, and they're not losing, and everyone else, unfortunately, is stuck in a bunch of tech that's a little bit high at the moment. Look at those. Look at that XLE. So XLE could still run for a little bit. I'm not convinced by the rally in oil, by the way. I think it's short-lived. If we go back to US oil for a second, even though we're looking at it from a day trade perspective, from maybe even a couple of weeks, I do think my little arrow over here is pointing towards the problem land, which is between $90 a barrel and $92 a barrel. I do think that's an issue. And I would say if it is going to keep going, which it looks like it will, this is probably where I think it tops off. But I'd like to hear what you guys in the chat think. Where's oil going to stop? Let's do a poll. We love polls. Let's do a poll. Start a poll. Where does oil stop? Okay, we're going to go to 84. We're going to go to $90. I'm going to get an option of $92 and then 100 plus. All right, let's ask the community a random poll like that. Let's see what you guys think. Dave Morgan poll dance. All right. Oil followed by DIA. Next investor disappoints. China may not be doing so badly, says Brooks Bird. Well, the thing is, if we consider, I like that giant eyeball on the bird there. It's kind of like looking at me. Anyway, if we consider what China stocks are doing, and of course, when you look at the data, I did this in my macro weekly. If you're ever interested in doing the free trial, you can do that for the private community. I do macro weekly as well. Yeah, basically, look, China's definitely suffering. There's no doubt. The property market's totally buggered. You've just got to remember that they do have the ability to jump in. They tended to do so in October, and it's pretty sick. But I do think we're kind of crescendoing with negative news. And you got to remember the stock. Ultimately, I don't really care about the news articles because they're not going to help us. Instead, what we need to be doing. Let's load up the China chart here. So we'll just. I want to keep Disney up here for a second. So we'll just load up CQQQ now. I've said the same thing for a while. I don't think it's going to happen right now, but I do think that there's probably something going to happen around October. And the reason is because I could see it doing this for a while and possibly like that type of thing. And the reason is simple. It's what they tend to do. So if you look back to last year, you got October and you get this rally. And I'm not sure if every year is getting October rallies, but I do think that a lot of the time they do tend to stack October rallies. Here is one where you get that initial October rally as well. And the reason is because that's when they have their yearly party meeting. So if you go back through and you look at October's, you may notice that there's a little stim pack that tends to come through. Now, you can't bet on a stim pack, but if it does come through, usually has a couple of weeks rotation into it. It's something to keep an eye on. I also think that is from a technical perspective. If I was looking at that in any normal market, I'd be saying, well, if we breach back above here, that's a super tick box. And of course, here is potentially a right shoulder. It's also a pullback of the deepness. You can go to 75, so that's possible. I just think that it looks better on a chart than, in terms of bottom picking, it looks okay. All right, let's see what everyone says. Oh, Take Two. Now, I kind of want to do Take Two because I heard that they've released Red Dead Redemption and ripped everybody off on Switch. So well done to Take Two. Wait, Take Two is Rockstar, yeah? I think it is. They're doing that thing. The stock itself, look, it's hit a little bit of a bump, but I think it's coming off a decent base. $100 is fair for it. Nice breach out. This will get their announcement, I believe, in very, very soon. What's this? Collaboration between Rockstar, GTA roleplay servers, Expert Sparks, GTA 6 discussion. Well, anyway, that's all I really want to talk about. Barclays, here we go. Barclays adjust price target for Take Two Interactive Software to 161 from 160. Thanks, Barclays. Thank you. 161. What? Why even bother? $1. $1 a stock. Anyway, they believe it's worth more than it is right now. My main thing here would be just GTA 6. I mean, basically, that's what you're trading it for. Once that gets announced, there'll be like this little hype train. I don't think it has been announced yet, but that would be, there's a lot of money in this franchise and the stock market tends to like it. Go back through and see when GTA 5 was announced, which is a long time ago. I think it was on the market back then. And you might be able to see how the market reacted to it initially and all of those types of things. So, yeah, I think that's the main play. From a TA perspective, though, it's hit a bit of a bump. It's probably pulling down. I'd like to see it clean up 123 and then find a rally. And that would be consistent with everything we're talking about here. There's a lot of gaps on the left sides of most of these stocks that rallied back in March and April that need filling. And this would be the perfect point for markets to come back. This is probably equivalent to that 4,200 on the SPY that we've been talking about. It doesn't have to happen. It's just a philosophy that you could put across most of the stocks. What do you guys in the chat think? Do you agree with that? Do you think that is a stupid idea? Do you think that this gaps need to fill or who cares? I mean, look at this. What is this? I mean, yes, it's earnings, but realistically, almost everything has this type of structural issue where markets have rallied with gaps and disjointed trades and super hyperbolic, crazy man stuff. And this is where all the trades came from. The 4,200 on the SPY, a big zone. Alex Chris, new CEO of PayPal, just announced. Thank you very much, Sue. Let's have a look at the PayPal. How's it reacting to that this morning? PayPal. And then we'll get into a couple of stocks that we're looking at. The news is making it go up 1.74%. Look, I liked our little rally on PayPal a few weeks ago. I obviously said it's target one, technical analysis. That's a big supply. That's a drop and a base and a drop and a rally. And no. But yeah, PayPal. I guess maybe it gets a rally here today. It's really deep. It's not any turn. It's not what I would call a replicable trade for me. Doesn't mean it is terrible, but it's not a replicable trade for me. Let's have a look at Disney. I'm focused on Disney again. The horror show. So we've obviously had one island reversal trade this year, and it rallied up a little bit, and then it failed terribly. So let's have a look here. Went about 5.51%. Now, since then, we've done nothing. We've looked at it, we've followed it, and we've been bored. And it does a little island down here. It's held that stop loss, and then it blew through this last week after earnings. It's now come back down, which is good. That's what I wanted it to do. I wanted to come down a bit more, maybe about 87, 86.50. I'd like to see a buyer recommence. And if that buyer does recommence, I'd like it to go back to about $94. So there is a possibility of a Disney trade here. If it does fail, though, and it makes a new low, it could get brutal pretty quick. And I'm thinking that the possibility at that point could be my extreme level, which is based on this wick here, based in 2020. That would be like a $79. So that's a fair one. Are you playing any earnings this week, says Zimster? Generally, I like to kind of react after to the earnings. This is the big earnings that is coming this week. So we're pretty much through main earnings. SEA would be one that I could look at. Another one would be Target as well, which I'm not sure if it'll surprise to the upside, but the stock is already burnt. So technically, it's an interesting zone. And then, of course, you've got Walmart as well. So let's have a look at all three of these stocks. We'll look at SE, we'll look at Target, and then we'll look at Walmart, I guess, on the chart. So let's do it right now, and we will continue to go through. So get off the Disney, and we will start off with SEA or SE. Okay. So it's coming in with very bad sentiment. You can tell it hasn't had any nice rallies. It's very tough to play a trade like this. Now, I'm not much of a trader into the earnings announcement, because what I tend to find is you do a lot better. And again, the chat might be able to help other traders out there. Do you find you trade better into an earnings announcement where you're trying to predict or, play the stats? Or do you find that you actually have better trades reacting to the news? So it's a react or predict that tends to do better for you. You can see here it's gapped down like other stocks. You'd expect a gap up if you're going to get a bit of momentum play before the earnings. I don't think that's going to happen. So it's currently going to float around here and setting up on a key support. If it breaches down, where do we go? Possibly new lows. It's not expecting much. You can clearly tell that. You'd have to go and read the earnings to see how bad the expectation is, but I can't imagine it's good. I think TradingView actually has here what its expectation is. So estimate is 0.65. Last time it did a 0.15. Ooh, that's a bad one. I don't know why, but that was bad. So 0.65 expectation. I don't know if it can even make that, but maybe it can. If we do breach out, so what I'd like to see happen here, if I was going to trade this, I'd like to see it do this, and then I'd trade it long to fill gap. Okay. That's what I would do. Steal first, then rally. I'm going to react to that type of news. That's the way I would do it. If we went rally first, then dump back down, I probably wouldn't take the trade short, because I think in this case, the amount of money to be made from it is not enough, and the amount of risk that I have to take is too much. So that's that one. Let's have a look now at Target. About just over 15 minutes, about 17 minutes, 18 minutes off open at the moment, guys. So we will keep going here. Now, Target's been consolidating very hard after its bad publicity and everything that went on. So this one's 2 days away. What about the price action, though? Let's have a look in the weekly to see whether we can garner any information about the wicks. And you would say, well, it looks like there's a lot of wicks more towards the negative than the positive. So how would I trade something like this? Well, I probably wouldn't predict it. I have bought this stock once over here and rallied it into the highs. And then it didn't really give me anything. It didn't actually manage to really take that high out. So the problem is I know that's defended. So I know someone's buying this level. I could put a volume profile through this as well by using fixed range. And I could basically figure out what the most traded level is. I know this is a defended area. I know this is the most traded level. I know that this has a lot of trade across the board. If you look at the histogram, that's fairly well distributed trade. So down here is technically cheap at the moment. Up here is technically expensive, and everything's trading through the middle. So if we went like this, I'd be super excited afterwards. That's going to take too long. Am I going to trade a gap up? Well, yes, we've got a gap down. We've been sitting here for 3-4 days. So if we sit within this range and then gap up, I might get on board at the earnings announcement. So it's probably the way I'd do it at this stage. Yeah, just look at the gap up if that happened. But for now, wouldn't do anything. And what was the other one? Walmart. Now, Walmart's on a tear, isn't it? It's been doing quite nicely. Nice big breakout. I think it's on all-time highs. Yep, all-time highs. I wouldn't even bother with this one into earnings. No real factor towards wanting to do anything here. I know a lot of people are going to try to short it. I don't think that's a good idea. It's moving up for some reason. Whether it's a buy the rumor, sell the fact, I don't know. But yeah, there's no. I don't. The other way you can play earnings is, of course, straddling off and setting up, far away legs based on options expectations. If you think they're going to be bigger moves, all these types of things. So you can do that type of stuff. W. Brett says its largest share owners are institutions. That's why the area low is defended. Yeah, I'm aware. Of course. I only trade stocks that have institutions owning them. What are you trading, Brett? I hope you're not trading anything crazy. No, I don't trade anything that isn't owned by tons of institutions. I like to have like a lot less stock being traded and big players in there. Then I can go and look to what they're doing. And once we can recognize that, I'm always a person that believes anything under $5 billion as a stock is no deal for me. I have a couple of rules. That's my first rule. The second rule, if you're new to the channel over the last couple of years, is I don't buy American IPOs unless I would get them pre-IPO. On the day of IPO, on the next day of IPO, in fact, for the next 12 to 18 months, bad. Okay, bad, especially tech ones. Terrible, terrible, terrible. You want proof? Look at Hood. You want proof? Look at Facebook, Twitter. Go back and look at it. It doesn't matter. You find one. Dropbox. I don't care. They're all terrible. And 12 to 18 months, Snowflake. Doesn't matter that they go bad. Okay. Then you can come in and be a little investor and say, yes, I like it now. That holds pretty true. All right. We got our poll in. We'll get the results coming through here. Did someone say a new COVID is coming? Oh my God. Where does oil stop? 90, 29%, 92, 29%. No one knows. Look at this. The chat doesn't know. 90, 29%, 92, 29%, 100 plus 26%, and 84, 15%. So basically, nobody has any idea where oil is going to stop. Short altcoins. Why are we shorting altcoins? Why we even remember Coin IPO? Oh, do I remember Coin IPO? What a trash heap. That was the worst. Well, actually, no, it wasn't. I think Hood probably also takes the cake. Hood was pretty bad. I'm pretty sure that went pretty high. Let me have a look here. Ugh. Oh yeah, that. Oh yeah. Anyone own Hood here in the chats? Don't be ashamed. Don't be ashamed if you own Hood. Does anyone have $80 Hood? $8 Hood, guys? I'm sorry to tell you, there is a high chance you will never get your money back. I'm sorry. Okay, I'm sorry. You will never get your money back with your $80 Hood. Okay? It's highly likely. Torvy says, I've got $50 Tilray. Kevin says he has $60 hood. It happens. It's okay. Keep it in your portfolio. I'm not a tax accountant, but maybe it could be a capital loss in the future. You never know. You know what I'm saying? Could be a capital loss in the future. Seek advice from your tax accountant and other professional. Or it could just slap you every day so you don't trade bad, crappy IPOs in the future. Just let it slap you. Just bang. Oh, my hood is down 90%. Whoops. That was a shame. All right, let's go through the stocks. 12 minutes till we open here. First up, dollar. Strong dollar. Stronger dollar than even. I think wait, is this just about to hit my target of the week? What the hell? Very strong dollar. This thing is a beast. Look at it go. I think it's actually hitting my target of the week. So we're coming into the daily 200 moving average, the top wicks, which is a huge deal up here. So you got these top wicks, and it's coming off that big bullish hammer, which of course, totally shreked everything that was bearish. So yeah, I mean, well, if you're on the bullish dollar train, this is a pretty interesting TP zone. If it keeps not taking this out, then you're going towards, I would think, somewhere around 103.65. So that's a big deal. Let's have a look at the euro versus USD then and go to that chart. So that should be making you low. Yeah, well, doesn't that look horrible in hindsight? Ooh, nasty looking thing. So that's probably even going lower, pointing out 108, like 60-ish. So maybe another 30 points lower. Yeah, quite a lot of move there this morning. Nick Kellogg says, can you verify triple M downtrend breakout and retests? Ooh, yeah, triple M was, I think it is a breakout retest. So, yes, I do like this stock at this price. Some of the legal issues they're going, I think, are actually turning around as well, which is kind of nice. So we've got the boost, the base here. We've got a rally through, which is great. We've got a pullback, which is excellent. It's basically about as wrecked as it can be. And I'll give you the perspective right now of how wrecked it is. So it could be defensive during a market sell-off. But this thing's been selling since 2018. So it's been aggressively selling also since 2021. And it's back to a price, if you can believe it, you could have bought Triple M at the same price in 2007 and almost the same price in 2004. So is it a horrible stock? Yes, I guess so. But I actually think it's at the hot price right now. So yeah, I would say for the first time in almost this entire drop since 2021, it's got a turn. Correct, Nick. In my opinion, again, risk management, make your own decisions, etc., etc. FOMO into Triple M. No, it's being sued, guys. Healthcare looking good. Yes, let's have a look at some of the hottest sectors we've done before. We did XLE, which still looks like it's got a bit of room. This does look like it's forming nice base, of course, on weekly, but daily also looking relatively strong. We take a new high. That'll be a big deal. 136.69. Big rejection wick there on the daily. So if that now takes through, then you could be moving towards 140. Defensives at August and September. Who would have thought that is a possibility? Not me, of course. Maybe you in the chat. I think chat was. J&J. Yeah, J&J is getting some serious trades on it. There's options all over J&J at the moment. It's Johnson & Johnson, for anyone that doesn't know. And yeah, it's had a lot of trades on it. So I don't even know what those trades are, but if they're accumulation, it's set to explode. You can see here the movement. That's multiple days, lots of trade through all of this action in here. Big rally off the earnings. Dividend coming up a little while away now still. But yeah, if it does rally, it could be an aggressive trade. And that's one that's on the poised for something. I don't know what it is yet, but poised for something. Next move, 180 on the stock. Bloomberg, this just in, Tom likes Triple M. Is this just a Kramer effect? Could be, Nick. Could be. Joshua Burns says, going short before August was laid out for everyone. I'm not saying it's laid out for anybody in particular. But yeah, it was pretty much the same. It was pretty good. Yeah, we've been following actually a pretty terrifyingly similar trend to the average at this stage, other than the fact that it's more percentage. Copper looks pretty bad, but no new low. If you wish to mark it out this week, mark 368 would be the zone. Do remember also keep your mark out for 2-year yields at 5.1%. I have noticed bigger banks and institutions and stuff passing around notes about the 5-year versus oil as well. So they're definitely still talking about it, even with the inflation figures out last week. And of course, we've got PPI, which shocked the market or at least scared it a little bit. Crypto, just before we get in here, 7 minutes, nothing going on in Bitcoin world, Ethereum world. It is so boring. My goodness, if you're in the crypto world, other than maybe altcoins, you are probably maybe you're just completely like a prune because you've done nothing for so long. It's just been sitting there. But you know what a good coil does? It brings in the opportunity. Let's go through a couple of other big stocks. We've got here Meta. Actually gapped down the other day. So kind of pointing towards potentially further sells, which is interesting. I mean, this has been a very aggressive trend. Daily 20 has held up pretty well. Obviously, it hasn't usually been underneath it for too long. Weekly 20 is still quite a lot of percentage behind. I mean, I have very little faith in this stock, but hey, the market seems to like it. What do our opinions mean? We did hit the gap fill. We do still have, I believe, an 11% potential sell-off here on this stock. What do you think in the chat on Meta? Does anyone actually like Meta at this price? Microsoft, my favorite stock in the market, hit the weekly 20. Again, I still think it's probably a little bit overpriced, probably due for a bit more pullback. It doesn't look good on a chart. I don't like it. Apple. Interesting point for it, though. If it does breach down, I think you've got to be paying attention. We did make a new low. So if you're an Apple fan towards the bull side, I'd be marking out 180.85 this week. And if it gets above there, we could be looking at further rallies. It did take a new low on the Friday and then found a little bit of a buyer. I still think, lower prices could be set in for Apple. So again, it's kind of in line with that semiconductor discussion. That's the big thing here. Even though we think this week could be down into sideways, and then if it's following the same trend it has, August last week would be negative. If we go over to things like Google, you can see again, just kind of topping off potentially here, potential island reversal to the downside if it does go busting down early. Amazon, similar thing, potential island reversal towards the short. Again, we're not going to get it today, it looks like. So, yeah, that's it because only 4 minutes to go. But they're all very, very similar. They all look kind of like they're toppy. Treasuries, people are asking about this still. I'm not a huge buyer of treasuries here, although I do like it from an investment perspective. Little known facts, of course, I've talked about it before. I don't mind that 100 strike before. And I still think that this is a distinct possibility. 90 to 88. I'm still looking. I'm still waiting for turns. This is a very aggressive turn structure, though I don't believe trading treasuries is the best way. DJ AJ says all tech is overvalued. Well, a lot of it is. Yes, right. I think Meta goes to 10. Maybe you're correct. I love Meta in the 80s. Good work, Joshua Burns. Congratulations to you if you bought it there. Coach B's $2. Thank you very much. Thoughts on BTC miners, Hut, Mara, CLSK? Thanks. Let's have a look at one of those, I guess, quickly here. Hut Mining. Pulling back, probably deserves 2. I didn't like them a few weeks ago. I still think they were too aggressive on the buyout. What I'd probably do is I'd take a fib from the low here on almost all of them, and I'd actually run that through. And I'd say, okay, maybe back down to this structure would be amazing, like $2, $2.20. And then if you take it here, you're probably going to get those ribbons as well. So that's maybe a 250. So I think 250 on Hut's fair. Let's have a look at Mara. It'll be something similar, I assume. Yeah, almost the exact identical trade. I mean, it's like the same thing. These ribboning 20 and 50 exponential moving averages, that could be the key. All right, guys, we're about 3 minutes off. Let's have a look at the Nasdaq and all the major markets. So we'll look first up at the German market. Let's take a little look. German market. Buying off the bottom, still weak overall, and of course did reject off the top. So, okay, what do I want to do here with the German market? If you are a bull, you're kind of looking at the next 20 points probably to look for a buyer. I'd probably wait for that, then wait for the new high, then look for it to break through to the high if that was to occur. Not a great trade. Would I sell here? Oh, you could if you. Uh, yeah, I guess. Yeah, it's possible to sell around this zone if you wish to. Not again, more of a coin flip trade. You're just going to have to make sure that it pays enough each time. I don't know if that's that good. XJO went to a new low, not really, fantastic. That's for the Australian viewers, so it still looks pretty bad. US 2000, I think, has more work to go. So 1897, again, that would probably stick with 440 for the SPY, which is what I'd like to see early this week. Ideally, a sell into potentially a buy rally to keep it above for the max pain. And this level would be good as well, at just underneath 1900. Nasdaq, let's have a look at the Nasdaq. Nasdaq is I think it had a new low before, again pointing towards possibilities of trading down to 14,800 should we get through and close to a new low, 14,957. About 1 minute off the open, guys, so we're just getting through this. VIX up 7.13%. This is still making a series of lower highs and lower peaks. You could argue, if you're a buy the dip trader, that there is a high risk reward trade here. So the risk is obviously high. You'd buy pretty much around current price with a stop below the low, and you'd be betting on that being the switch of trend towards a little rally early in the session. So it's come again. The market is technically at these kind of buy scenarios, similar to the DAX, similar to the Nasdaq, and all these things, but they are, you have to make your own risks. That's what it is. Are they solids? Not great. Not good enough. US 2000 is giving folks clinical depression. I don't think so. Joshua Burns says, I'm cheap and I like bargains. So you are the ultimate value investor. All right. Ding, 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 ding. We are open. So we'll watch the NASDAQ here through the open. 0.3% down, 0.23 for the US 500. Other notables are that NVIDIA. Did I just see that was down 3 and then chunked like 2%? One second. I got to look over on this chart. Let me just. Was I blind or what just happened then? Was that maybe that was Friday and it ticked over? Yeah, it was Friday. All right. I'm blind. That's okay. So, all right, we're down about 0.3 still. I thought that was 3% down, but I was wrong. Treasury is down. Bonds across the board mostly down, including high yields, it looks like, though not considerably. As we scroll through, the Triple M that we thought was on an okay target is down 0.31, but not much. Disney holding its own around this level, which is interesting, and just went green. And utilities up on the session. Let's have a look at utilities here. Oh, that's Staples, sorry. Yeah, Staples looking like a decent base. Let's have a look at utilities. They're flat down, are they? Yeah, utilities interesting as well. A little bit of a turn there. Possible buyers that may commit after coming back down to these lows. So interesting point here for utilities this week. All right, so it's mostly just tech and US 2000 selling. German markets doing absolutely nothing, flatlining, and gold is down. Let's have a look at Barrick. Let's load up Barrick here. See how it's trading. I guess it's down on the session, 1%. Yep. It's been pretty good since we started talking about it. Gold stock definitely doing better than the metal, but strong dollar is affecting it. GDX, starting to come back down. No test. Remember, 29.80 for the rest of the GDX stocks. So that's gold stocks in general. If that's breached, good news for buyers. If it isn't, I don't know about GDX. Barrick looks better than the actual gold sector itself. Let's have a look at gold. It's coming down to 1905. So getting smashed into the demand again. And it does look kind of weak, doesn't it? It doesn't look great for the actual metal, and that's mostly thanks to yields. Remember, if yields go up, gold does not like that. Contrary to popular belief, it doesn't really like that. There's still this weird little area here in 1870. Weekly close actually was underneath. Probably missed that in my analysis, I guess. Yeah, we'll see with this one. But I still think gold stock is better than gold, the metal, at this stage. Matt says, Tom's browser tabs give me anxiety. Do you like my browser tabs, sir? So many of them. I even almost remember where each one is, such as this is BPSPX. See, I knew. That's right. And this one should be the skew. There's the skew. Then we got semiconductors or S&P. Semiconductors are here. There you go. So we're pretty close with all my tabs. Yeah, skew crush is fairly big. So this is actually something we looked for being bears. But we've got to be careful here, guys. Just remember, 44.40 is a big deal. Where it is right now, we gave 5 bull cases. I don't like to predict the bull case. I instead would like to react to it. I don't know why this is not refreshing. So whatever, we'll just use this chart. If we go to the 2-hour, you can see again all these markets, little Nasdaq, little S&P, they're at that zone where, high risk reward scalpers are going to be like, oh, I'm buying the dip, but you will lose that trade well over 50% of the time. So because you're trying to buy against the trend, which at this stage is actually down for the first time in a while. We've got a swing downturn. Diamond bottom in the short term, says Alex. Yeah, not a pattern I usually like to trade, but yes. I thought the reaction to the CPI was comical last week. Came in 1.1% lower and everybody freaked out. Yeah, I think I don't even know what people's reaction was to it. But basically, I wasn't really reading. To me, it just had the same problem in it. Shelter's still relatively sticky and the biggest problem. And really, it just shows you time and time again that we can use news as catalysts to get in and out of markets. But really, it's not. It's whatever the trend and the price action wants to do. If a market's moving from a point of equilibrium to another point of equilibrium, it's going to do it anyway. Kevin says, Tom's child is in trouble. Tom is going to teach him every tab. Kevin, you come into the conference, sir. By the way, if anyone's interested, we've got our speakers. Most of our speakers are now up on our website, fxevolution.com, which is down here for Vegas. And I can tell you there is some seriously good people coming. People with over 250,000 Twitter followers, X followers plus. We've managed to get a huge amount of CMT traders to come, which is excellent. We called in all the favors. They're an awesome group of people, and we've got all of them coming to Vegas at the same time. So if you're interested, check it out, fxevolution.com. It's in September, late September in Vegas. I don't think we'll do it again, so it's the time to do it. It's hard to It's hard to get everyone there in one space, but yeah, if you want to meet a lot of people in the community, it's going to be super good. And the best thing about all these people is they use hard stats a lot of the time to back up what they've been doing. In fact, BPSPX, which you've been using recently, is from one of those speakers. So in fact, they use it and they'll go through that, I'm sure, if we need them to. So it's going to be good. Did you get the Druck? I didn't get the Druck, Travis. Sorry. That'd be a pretty good one. I probably actually got better people than the Druck for this particular for what we do here in the crowd. Yeah, the Druck's awesome. Hey, I love the Druck, but I didn't get the Druck. The Druck's just going to tell us super interesting things, and we're going to sit there going, "Yeah, that's right." Thank you, Druck. Thank you. What do you mean hard stats? As in they have a lot of backup for the technical reasons they use things. Like they've actually gone through and done a lot of the replication and broken down the statistical edge, etc. Why are rates popping? Japan? Yeah, so you want to look at JP10Y as well. So if you have JP10Y. Oh, yeah. Also, check this out as a chart. Percentage of stocks above 20-day moving average. So we're at 38.51. We usually bottom somewhere around 25. So make sure you've got that on there. JP10Y is worthwhile using. So, yeah, I didn't really talk about it today, but this is a component, 0.619. It's not really that's causing this big spike, I think. But, yeah, yields are coming up. Again, is that the main reason? Who really cares? Price action is ultimately the reason why something moves is much less important than where it's moving to based on what you believe the bigger players are doing. Remember, focus on the storyline, focus on equilibrium point to equilibrium point, and you'll do a lot better. The narrative of why it's moving is, generally speaking, just there to cloud your judgment, because then you try to interpret that narrative. I always say this to every private trader I've ever dealt with and would talk to. I always say, what makes you think that you can interpret that narrative better with the limited information that you have? It's going to be hard. Tesla getting slapped around. It was worse before. It was down 3%. So again, just to finish up the show here, we've had NVIDIA down a bit. Now it's back to flat. Meta's the worst of the big tech stocks. And markets are being led by really a sell in US 2000. So US 2000 is catching up to kind of hit that zone we were talking about. And I thought that might have taken us to 44.40 on the SPY, but it looks like this one wants to go without. That would so if that hits and then we start seeing turns, well, all the markets have come into the harmony of the levels that they want. They're auctioning a lot of bonds. Yes, they are. There's a lot of bonds, but it's not actually making yields move as much as you would think, considering. Thank you very much, Chris. Yeah, hopefully the women's team do win on Wednesday. That's going to be an interesting one. The charts are the ultimate lie detector. Couldn't have said it better than myself, Joshua Burns. Very good. Absolutely. All right, guys. Thank you very much for joining us here for the Monday. We'll finish it there. So our thoughts are pretty much standard. We still think that this week could be a little sell or a little sideways sell kind of thing. We've got maximum pain. We'll watch it. Next week, we think there could be more fireworks on markets to maybe make a low if we're going to place on pre-election years. We have seen multiple things that force us to think that this is maybe a more sustained sell-off, and that is BPSPX crossed from 70 down below. We also have, of course, everything to do with the seasonality of this time of year and the weakness that comes from that. And then we have movements through things like daily 20 moving average, et cetera, et cetera, et cetera. So would we like to see mean reversion? Yes, at least. That is a weekly 20 moving average. We are not there yet. We're probably about 3 to 4% away from the US 500. And yeah, it's perfectly normal for markets to rally a little bit, but you probably don't want them through like 45.50, because if 45.50 gets taken out, that's a little bit of an issue. That probably means that the selling as it sits at the moment could be over. Keep watching, guys. Keep reacting and not predicting, and be careful of news stocks. Of course, they can brutalize you. Join us next Monday as we go through the stream again. Otherwise, we have a daily show that we prepare every single day at the close. We do that Monday, Tuesday, Wednesday, Thursday, Friday, and everything else. So, of course, if you're interested, been doing it for years now, and it's great to have you. Also, Vegas conference, check it out. See if you want to attend. It's going to be awesome to meet so many of you. But more importantly, it's not just me talking about something you've never heard from me before, which would be cool. But there's going to be some excellent speakers there. Make it down if you can, or make it up, or wherever you are in the world. Thank you so much. Join us next week. Otherwise, see you at the close. Bye for now.